The CEO of Rogers Communications says the company is attracting significant interest from private investors for a stake in its gigantic sports and entertainment business. The telecom and cable giant is considering whether to take the sports assets public, maybe via an IPO. Let's get more from Vince Valentini, Managing Director of Equity Research at TD Cowen. He says Rogers is a top stock pick. Vince, it's great to talk to you. We could maybe put up a chart here just to give the viewers some perspective. It's estimates from Sportico, a website that tackles the business of sports. So it's not the Raptors are the most valuable, then the Maple Leafs, and the Jays are not all that valuable, relatively speaking. But we are talking about billions and billions of dollars for these teams that Rogers has the majority ownership of.
Yes, absolutely, Andrew, and thanks for having me on to discuss this topic. I think it's very important for the Rogers stock. It's been starting to help the stock in the past couple of months as people start to understand it a bit better, but there's still lots of runway to go over the next year as this plays out. And they have a couple of steps remaining to sort of really crystallize the value of these teams and make investors notice it on a more permanent basis. First, they're being very transparent that they will definitely buy out Larry Tannenbaum and yes. Kilmer and his 25% equity stake. That hopefully can happen by early next year. He's probably waiting for the next round of Sportico and Forbes valuations that come out over the next 2 months, so he can use that in his negotiating. But then Rogers is very clear they will move on to bring in a bunch of new private investors to repay a lot of debt on their balance sheet, which it was important for investors to see, as well as to to showcase these values. What you're showing on paper, we've seen those numbers for a long time, and I fully believe those numbers to be accurate, if not too low. We see tons of transactions happening all the time. Recently, we've had the Celtics and the Lakers and the New England Patriots. It seems like every week there's another transaction at a record level across one of these North American leagues. So I'm sure that those Sportico values are reasonably accurate, but those are just numbers on paper. Investors want to see hard dollars put behind those Forbes and Sportico numbers, and to say, okay, yeah, Rogers, now you've really proven to us that these teams are worth this much.
Now, you estimate roughly, Bloomberg quotes you as saying that the sports assets are worth about $17 a Rogers share, but you think that right now in the stock price, only about $7 to $10 is embedded?
That's exactly right, Andrew. That's how we frame it. Give you some context. $17 per share would equate to just over $9 billion Canadian. Rogers says these teams are worth $15 billion, so we're not giving them that much credit. Rogers would even acknowledge that to get the $15 billion full private market value, you'd probably have to divest your entire ownership interest in all these teams, which Rogers is clear they're not going to do. What they want is to have their cake and eat it too, that they're going to keep voting control of these teams, but sell some of their interest so that they can get partial credit within their share price. So our estimate is they can get $9 billion worth of credit, which is $17 per share, and they're only about halfway, if not even halfway there at this point. So there's another fairly good chunk of upside for the stock as this plays out.
One thing, apparently, that in the public market, though, sometimes sports teams are less valued in the stock market than they would be in the private market.
100% they are. That's almost a fact. It's not conjecture. We see it every day with Madison Square Garden, trades at anywhere between a 30 and 35% discount to what Forbes says those teams are worth. In that case, they own the New York Knicks and the New York Rangers. So it's pretty common, and it's not atypical for any public company. When you see takeovers happen anywhere in the market, it's almost always at a premium to what the stock is trading at. So some sort of public company discount is going to be there if they did an IPO or have these sports teams trade publicly, as opposed to a full private sale. But Rogers is fine with that. They accept there'll be some sort of discount. And again, our number at $9.1 billion already reflects some of that discount. That's why part of the reason we do not give them the full $15 billion worth of credit in our target price.
Just on that valuation calculated by Sportico, I was interested to see that the Raptors are far more valuable than the Maple Leafs. I thought the Maple Leafs were the be-all and end-all, but why would the Raptors be more valuable? Because they attract a younger audience, perhaps?
So the Leafs are the number one franchise in the NHL
Yes.
in terms of value, but NBA teams in general have much higher values than hockey teams. It's partly the revenue. The NBA broadcast contract is much higher, and yes, they have a larger overall audience base across North America. Obviously, in Canada, hockey's number one. We all know that, but the value of these leagues and these teams is obviously a bit more dominated by the U.S. audiences.
Fascinating stuff, Vince. We could talk to you all day about this because there's always so many wheels within wheels with these sports teams. Thank you very much, and I hope you come back soon.
Take care.
Vince Valentini, Managing Director of Equity Research at TD Cowen.